Well, happy February, everybody. I hope everybody is safe and warm. As I kick off this month, just FYI, we had a pretty hefty ice storm here in Austin. In fact, our house is without power now on day 2. Probably a third of Austin right now is without power. The main reason is we had a big ice storm and knocked just a billion tree branches down, which have knocked over power lines and caused all kinds of havoc. I'm in my warm and comfy office right now recording this for you. But normally this newsletter would have come out a few days ago, but it took me a while to find some power to record this and get it out to you. So I want to give you a look at the market right now, show you what's happening in Austin as we round out January and move into February, kind of some of the trends that we're seeing. We're going to start here with December data. So the chart you're looking at is volume, number of homes sold, all the way through last year. So we are the orange line. That was 2022. You can really see when interest rates started to spike here in the spring, it just depressed the number of buyers out in the market buying homes. We always see a little uptick at the end of the year because you have the last surge of the year is always kind of late October before and into November, right before Thanksgiving. That's going under contract. A month later in December, they close. And so that's why you always see this little spike at the end of the year. But if you look at the beginning of the year, it always starts low. So we're now on this up cycle that we expect to see more transactions take place. Again, here's sales volume, which is price for December. Here's median sales price. So again, the orange line, we started last year around 480, peaked up almost at 550, came all the way back down, and we ended the year at 457. So we ended the year a little lower than we started, maybe by 20 grand. And that was the first month year over year in December where we saw a negative year over year. So December 2021 closed at a higher price than we closed in December 2022. However, interest rates kind of peaked around November. I'll show that to you in a second. But because we had such a sharp decline in price that first 6 months after the peak, it has started to taper right now and slow down that decline. In fact, we may see it start to flatten here in future data. Average sales price, again, seeing the sharper decline from May through September, and then started to slow down that taper near the end of the year. Total listings is kind of the story, right? We're watching inventory. We want to see how that's trending. So this is 2022. We started the year with super low inventory and super low interest rates. So the first 3 months, super strong buying activity, and that kept inventory down. But once the Fed started raising rates in March, you can see buyer activity just dwindled. It's not that we had more sellers, and I've said this in previous videos, it's because we had that many fewer buyers. We just had very little buyer activity, probably between April through maybe October. Because they were all getting, the interest rates just kept moving so fast on them. And so what happened is it allowed the sellers to stack up, not only resale sellers, but new construction. So you imagine all the builders building these big subdivisions, and all of a sudden nobody's coming in the door and they have 150 homes to sell. And so it really stacked up that inventory. Inventory peaked probably September, maybe early October. And since then, we've seen the numbers come back down some, back to about 8,000, maybe 8,500 single family homes for sale, higher than we've had the last 5 years, but in line with maybe where we were, maybe mid-teens, like 2015 or 16, something like that. And again, here's months of inventory peaked in later than normal. Normally it peaks in the summer. This time it peaked late in the fall. So that was a look at December. Here's a look at January. So we just got this data a few days ago. This comes from Austin Title. So they gave us our first look at January 1st through January 31st. So in 2021, in January, we sold almost 2,500 homes. In 2022, this last month, we sold only 1,547 homes. So 37, almost 38% decline in number of transactions in January. That's a really small number. But January is traditionally our slowest month. And so I expect we will see that number of transactions going up. One of the reasons is in a chart I'll show you here in a second. Sales price averaged 565 at the end of in January 2021. It was 555 this past month, down about 1.7%. Again, we're back in line with where we were at the beginning of last year. And then days on market, almost 2.5 times more. So 28 days on average, a home property would go under contract. In 2021, really it was 2.8 days, but once you factor in the properties that weren't priced well, 28 days. Now it's about 70 days. So now you're looking at a little over 2 months before a seller on average is likely to get an offer and go under contract. And so again, about 2.5 times. And then median sales price, it was 473 back in 2021. This is for the entire metro. 2022, it's down to about 448. It says up 5.5. That's not right. It's down. They just put the wrong word there. So anyways, again, we're not too far off where we were January 2021. The difference is going to be the pace of sales. The buyer demand is not going to look like the pandemic anymore. It really is trending much more back to normal. We're also seeing a pretty easy opportunity for buyers to have the ability to negotiate again, to get contingencies, to get repairs if they need to maybe take some off the price if it's not listed at a price that works for them for their budget. So that's now looking at December and January. So what is activity looking like right now? It's driven off this chart right here. This is the Federal Reserve economic data. This comes out of the St. Louis Fed. This is the 30-year fixed rate mortgage. So mortgages, surprisingly, have started to perform better for buyers since November. So this is all of 2022. We started way down at 3.5% when we started last year. And you can see that just the rising rates went up to 4s, then 5s, then got to the 6s, kind of got a little better at the end of the summer and then took off like a rocket, 5, 6, 7. So we got to 7 at late October, early November. And that really was just crushing the market. Buyers couldn't make anything work. Everything seemed expensive, tons of price reductions because, again, buyers couldn't make that monthly payment work. But since then, the bond market, which is forward-looking, trying to predict what the next 10 years are going to look like on a 10-year treasury, more people started pouring into bonds. The yields got better. They got more interested to preserve capital, meaning I want to save money and make a little interest on it, put money in the bonds. The second reason is the bond market tries to predict what's going to happen next. And they were predicting, hey, we could be heading towards a recession. So that also feeds more people into the bond market. When more people buy bonds and that raises the price of the bonds, the yield on the bond goes down. And that is what impacts the 30-year mortgage. Here we go. So since November, we dropped back down into the 6s. We started the year about 6.5. And now we're down. Even in the last week, it went down again this week. Even after a Fed raising a 1/4 point, it went down. So now we're hovering just a little over 6% on a 30-year fixed rate mortgage, assuming no points or anything. And this is a national average. But what you can see is it's actually helped buyers since mid-November. So what's happened is we can feel it. There's a little more buyer activity in the market. Open houses are getting traffic again. And we're also in January, to be fair. December and November are usually really slow months. So now we're trending into the spring months when you get more buyer activity and interest rates are finally starting to, come back to normal, meaning they're kind of going sideways, not way up or way down. So if that trend continues, that is really the big if. But if interest rates can continue to go sideways and kind of just juggle up and down in the 6s, I think we're going to see an okay spring market. I can't tell you if the price will go up or down. That's too hard to say yet. But I do feel buyer activity coming back out, definitely more buyers than we've had the last 4 or 5 months coming out into the market. That's pretty traditional for January, February, March. Buyers buy before the sellers have their homes ready. So they're going to chew up some of the inventory that we have on the market. And then we'll see that inventory start to build again as we get into the warmer spring months when all the sellers are ready to sell their homes. And we should, if it follows a normal year, we should see more and more inventory and also potentially price increase. If the prices are going to go up, they're going to go up between now and June. And so that's what we're watching right now. Things are looking okay as we head into February. If you are a buyer, you still have plenty of opportunity to find properties. They're not selling as fast as they did the last 2 years. So you're going to have time to look at things, sleep it over, talk to the lenders. Maybe you're the only buyer, so you can make an offer with the seller. If you're a seller, however, you're finally starting to see, hopefully, what could be a bottoming of the market. I don't want to call it yet because we haven't seen the median home price go sideways, but at least it's not dropping as fast. And we're starting to finally pick up some buyer activity. So if all that holds together, I think we're going to see not an amazing year. It'll be kind of a sideways year. But compared to the last 6-7 months, I think that's what people are kind of keeping their eye on. So hopefully this data is really helpful. I wanted to share all of this with you. Obviously, for those of you I'm working with directly right now, you're going to get videos like this every single week to keep you up to date with what's happening in the market. But if you know anybody looking to buy, sell, or invest in Austin right now, make sure that we get an opportunity to connect with them and have a phone call and keep them up to date with everything on the market. Until then, stay warm, enjoy your February. Happy Valentine's Day coming up, and talk to you guys soon.